Hi, we're going to quickly go over the main capital structure ratios. Okay, so the first one under that is what we call the proprietary ratio, which is equal to proprietors funds upon total assets. Okay, and you need to keep in mind proprietors funds is the same thing as owned funds, which is equity share capital plus reserves and surplus. Okay, so we have proprietors funds, proprietary ratio, and what it calculates is the proportion of the owner's contribution or owner's investment compared to the assets of the business. The next thing we need to look at is debt to equity ratio. Debt to equity ratio is just that, debt upon equity, and equity is the same thing we have seen upstairs. Okay, equity is owned funds, which is as good as proprietors funds or equity share capital and reserves and surplus. Okay, so that is something you need to keep in mind. Then what about debt? Debt is equal to borrowed funds, also called non-current assets, and what you normally find under that is long-term loan, or sometimes it's just called term loan, or even if they say bank loan, you can assume it's a long-term loan, plus debentures. Okay, so you have your equity, you have debt, you get debt to equity ratio, and once you're done with that, we have capital gearing ratio. Okay, capital gearing ratio, which is equal to capital with fixed return, upon capital with no fixed return. Okay, so what counts as capital with fixed return? Capital with fixed return, normally you can think of any long-term loan from the bank, you can think of debentures, you can think of preference shares because we are giving a certain return which is supposed to be guaranteed, preference shares. Okay, capital with no fixed return is the same thing as upstairs. Okay, and you all know what all comes in. Equity share capital, okay, your own funds basically. Equity share capital plus reserves and surplus. Now, we are done with proprietary ratio, we are done with debt equity ratio, we are done with capital gearing ratio. Please make sure these are memorized, because going forward, not just for your current semester, but any further semesters, many levels in professional courses, these formulae are useful. Thank you.